Hey guys, welcome to my channel Easy Economics 67, wherein currently we are studying the chapter Money Market and Capital Market in India. So let's start. In today's lecture, we are going to discuss the problems of the capital markets. So let's go for this. First one, financial scams. See, there are increasing number of financial scams that have resulted in the irreparable loss for the capital market. Whenever any big scam takes place in the market, then but natural, people like you and me, the common individual investors, we lose trust in the market. We don't trust the market because how can we trust if the scams are happening? Then if we lose our money, so in that case, people lose confidence in the market, people have distrust on the market, and as a result, the small common investors, they are hesitating to invest in the market. So this is the big problem in the Indian capital market. We have faced many scams up till now. Sorry. Second problem, insider trading and price manipulation. Now see, this is also happening in practice. In real market it happens. Insider trading means what? Anybody or the group of individuals who have access to the unpublished information, whichever is the news for any particular share, that news is not published yet, it is unpublished. So the from the inner circle they get this news, and on the basis of this news, this unpublished information, unpublished news, people make decision of buying or selling of a particular security for their personal benefit, of course, which is not legal. This is illegal. This is called insider trading. That means in their circle only they know this information before the publish of the information, and on the basis of that concrete information, that firm information, they take the decision of buying or selling of a particular security for their personal benefit. And afterwards, after doing that, whatever buying selling they are doing, and after that the information is made public. That's why there is nothing in people's hand to do about it. These people gain large scale profits for their personal benefit. This is what is insider trading. Also, people make use of insider tradings, this price manipulations, etc., to evade the taxes also sometimes. Sometimes even it is used for evading the tax. This is the fact. Moreover, on the other hand, price manipulation means what? To simply raise the prices of the shares through buying and selling of shares within certain individuals themselves for personal gains. That means in their group itself, they are all of a sudden, if they want to raise, they will raise the price of the share. Of course, price of the share can be raised by making more demand on a large scale. If the demand rises, price of the share rises. Simple logic. Similarly, if they want to make the price of the share fall, at that time they will do the large scale selling. On a large scale, they will start selling the share, and due to the selling pressure, then the price will fall. So this is how the price manipulation is done. Such illegal practices have also affected the smooth functioning of the capital market because the common people don't understand what happened all of a sudden, why this share is falling, why it's crashing. People don't understand, but many a times it happens due to the insider trading and price manipulations, due to the information which is unpublished or non-published. Next, third problem, inadequate debt instruments. See, debt instruments includes bonds, debentures, etc. You also must have seen that there is not much trading in the debt securities. See, equity shares, they are traded well on the stocks, but the debt instruments are inadequate due to narrow investor base, because investors are not much interested in investing in the bonds and debentures. They prefer to go for shares. They prefer to go for share stocks. Moreover, high cost of issuance. To issue the debt certificate also, it involves higher cost as compared to the equity. Then there is lack of accessibility to small and medium enterprises. They don't have access. They don't have much access to the bonds and debentures, because as such the investors are less, investor base is low. Then but natural, the big enterprises, the giants, they capture this investor base, and hence the small and medium enterprises don't get any opportunity or access to this debt instruments. So that is also one of the major problem of the Indian capital market. The next one, fourth problem, is decline in the volume of trade. See, the regional stock exchanges have witnessed a sharp decrease in the volume of trade because what happens is now but natural. It's a common human tendency. Investors prefer to trade in securities that are listed in premier stock exchanges like the Bombay Stock Exchange, National Stock Exchange. So people prefer to deal in BSE and NSE for greater security purpose. Of course, anybody wants their security. Investors wants their security. So they prefer to deal in premier stock exchanges like BSE and NSE. Whereas the regional stock exchanges, they witness sharp decrease in the volume of trade because nobody prefers to trade on the regional stock exchanges. Then last and the fifth one, lack of informational efficiency. A market is informationally efficient. We may say that if a company's stock prices incorporate all the available information into the current prices. However, the stock markets in India lacks informational efficiency compared to the advanced countries. In advanced countries, they show all the information, whereas in our country, we have to search, we have to study, we have to do the technical analysis, the ratios, we have to study, we have to follow a particular stock if we are interested to. So that's why it is said that in our country, in India, Indian stock markets, they lack informational efficiency because investors, traders have to study on their own. They have to study much. So that's it for today. I hope it helps. Today we discuss problems of the capital market. I revise in short. Problems of the capital market. First one, financial scams. Second, insider trading and price manipulation. Third one, inadequate debt instruments. Fourth, decline in the volume of trade. And the fifth and the last one, lack of informational efficiency. I hope it helps. Hey guys, do watch other lectures, videos and playlists uploaded on my channel. And please support me guys. If you understood this little bit also, then make sure to like, share and please subscribe to my channel. Thanks for watching.